Hello everyone. Today we're talking about workflows again. Don't scroll away just yet. I am going to share some practical insights today. Many people hear workflow and think it is impractical. Isn't it just letting AI judge trading decisions and then execute trades directly? But honestly, relying completely on AI is indeed unstable. I've tried it several times myself, and AI's judgment is hit or miss. I really don't feel confident using it. But can we shift our perspective? The FMZ platform has many carefully designed traditional strategies. These strategies have clear logic and are battle-tested, but they're just a bit rigid. So, can we use workflows to add an AI brain to these traditional strategies? Let the strategy do what it does best, and only have AI help with decision-making at critical moments. Some might ask, if AI is so powerful, why not use AI for trading directly? Once you understand the nature of large language models, you'll realize that AI is still weak intelligence. At the current stage, relying purely on AI for trading carries significant risks. Would you dare to entrust your hard-earned money to something this unstable? I certainly wouldn't, but traditional strategies have problems too. For example, grid strategies have fixed parameters. When extreme market conditions occur, they can only sit and watch helplessly. So what do we do? The best approach is to combine the two, use traditional strategies to provide a stable framework and let AI assist with decision-making at critical moments. This way, we can truly leverage the advantages of both. Now that we've covered the concept, let's look at how to implement it specifically. I am using a bidirectional grid strategy, which is quite mature. Its logic is simple. When price drops, open long. When it rises, open short, capturing price differences in ranging markets. Why choose this strategy? Because grid strategies have an inherent flaw. Their parameters are fixed. After you set the initial price and grid spacing, no matter how the market changes, it stubbornly sticks to those parameters. In ranging markets, it can indeed generate stable profits. But once a trending market appears with prices continuously rising or falling, the grid gets broken through, and you end up fully positioned at highs or lows. Some of you might want to argue with me, saying grid strategies are meant to profit by patiently waiting for price regression, and frequently adjusting parameters will only lead to frequent stop losses, which is counterproductive. But what I want to say is, the main purpose of our workflow is not to overturn the core logic of grid strategies, but to explore how to better improve traditional strategies using AI. What if the price really trends away and never comes back? Would you rather wait 3 months, half a year, or have AI judge based on market sentiment whether this wave of price action has any possibility of reverting? Alright, I've digressed a bit. Let's get back to the strategy itself. Before we start building, I need to explain the difference between traditional strategies and workflow strategies. Traditional strategies typically run continuously with while loops, but in workflows I've changed it to a trigger mechanism. Each time a candlestick closes, it triggers once, updates the price once, and checks opening closing conditions once. This approach is more suitable for workflow execution logic and more resource efficient. More importantly, the trigger-based approach makes it convenient for us to insert judgment nodes at various stages of strategy execution. So, based on the traditional grid strategy, what exactly do we have AI judge? How is it implemented? Let me first clarify the overall approach. The biggest problem with traditional grid strategies is fixed parameters. Once a trending market occurs, you get fully trapped. So the core question we need AI to judge is in the current trapped situation. Will the price revert? Do we need to reset grid parameters? To enable AI to make this judgment, I designed a 3-step process. First, add a monitoring node after strategy execution to track position status in real time. How many positions are open, how long they've been held, how much the price has deviated from the initial grid. Second, set trigger conditions. Only trigger AI analysis when abnormal situations occur, such as full position plus price deviation beyond a certain range or holding time exceeding a threshold. Third, feed current position data and market news sentiment to AI together, letting it comprehensively judge whether adjustments are needed. The benefit of this design is that AI doesn't intervene frequently. It only acts when it should. I also added a cooldown mechanism here, allowing AI analysis to trigger only once within 10 minutes to avoid repeated parameter adjustments. In simple terms, we've embedded a hook in the traditional strategy's execution flow. Normally, the hook doesn't activate, but when an anomaly is detected, it pulls the AI thread. Having explained the entire process, let's talk about what results this system is expected to achieve. Theoretically, it can solve the problem of fixed parameters in traditional grid strategies. When a trending market causes full position trapping, AI will judge based on market sentiment whether to adjust the grid center price. If the judgment is accurate, stop loss can be executed timely, regroup, and start again. Regarding costs, as the saying goes, save where you should and spend where you must. When the strategy is running smoothly, AI is not called at all, not costing a penny. Only when extreme market conditions are detected, AI would intervene to judge whether parameter reset is needed, so costs are extremely low, just a few dollars a month. But let's be clear, AI is not omnipotent, it can also make wrong judgments. The essence of this system is adding an insurance mechanism for traditional strategies to cope with extreme market conditions. Alright, that is all for today's sharing. To summarize, the core concept of this workflow is traditional strategy foundation with AI decision-making at critical moments. Use trigger mechanism to replace while loops, making it convenient to insert various judgment nodes. Of course, this is just an attempt, and there are definitely many areas that can be optimized. For example, trigger conditions can be more refined, AI prompts can be written better, and volatility thresholds can be dynamically adjusted. I believe many strategy experts can create even more variations. Everyone is welcome to discuss together.